Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Obviously, the big news has been the strike on the Saudi oil fields. That's sent oil prices spiking, and it's really just a question of how quickly they can get that supply back on stream. Certainly, initially, oil did spike by around sort of $12 a barrel, but it's going to be interesting now because the Saudis sort of seem reasonably sort of confident they can get supply back on track really by the end of September. So it's going to be sort of a short-term glitch. But now the ramifications come in as actually who caused the drone strike. Initially, Yemen rebels claimed responsibility for it. The US was sort of pretty quick to say that that's really not possible. They didn't possess the sort of hardware, etc. It was more than likely came from Iran. Saudis have now come out as well and said that the drones appear to be sort of Iranian origin. And it's just going to be interesting now to see how these investigations sort of translate. Certainly it's no secret that the Trump administration really has no real time for the Iranian administration, and certainly if they can find an excuse to sort of drive some further sort of sanctions in there, or even potentially a military sort of strike, the Trump administration would sort of relish that opportunity. Now, obviously, the consequences of that would then be to sort of further heighten sort of tensions in the Middle East, and potentially sort of spike oil prices a little bit higher as well. Now, obviously, on the back of that, that's bad for obviously global growth, but also as well for the US consumer. And going into an election year with spiking oil prices and obviously gasoline prices, that wouldn't be good for the Trump presidential campaign. So obviously, really just trying to keep a fine sort of balance out there and sort of temper sort of comments, etc., until they had sort of hard, concrete facts, and then they can come up with a course of action. So on the back of that, obviously global share markets sort of suffered a little bit beginning of the week. But I say if this really is just a short-term glitch and the Saudis can get sort of supply back on online, it really will be that, and the market should then start to focus again on sort of fundamentals. And certainly if you look in the US, fundamentals are reasonably strong. You've got a pretty strong economy. You've got potentially, some signs that maybe there is a deal to be done there with China on the trade talks. Because last week President Trump came out and for the first time sort of talked about a potential interim deal with China. Now that obviously alludes to sort of potentially a sort of an interim deal until they can get a final sort of pact sorted out, and that will maybe sort of smooth the way and sort of keep certainly trade going, but also as well keep the US economy sort of pushing through as well at a pretty reasonable rate. We also have the Fed meeting at the end of this month as well, and it'll be interesting to see if they do cut interest rates. Certainly at the moment, they're sort of edging towards potentially a sort of 25 basis point cut. But there is a bit of talk about a 50. Potentially, I think that's maybe a little bit too much given the current climate, but also as well the current sort of fundamentals given the strength of the US economy. But obviously what the Fed doesn't want to be drawn into a situation is like the ECB, where they have to keep going back and sort of coming up with sort of fresh proposals. ECB at the last meeting came out and sort of announced a fresh round of sort of quantitative easing, another sort of small interest rate cut as well to take rates further negative. But really all the time the ECB is sort of struggling to get sort of in front of the curve really. It's always sort of being reactive rather than proactive. But it is quite interesting, certainly on sort of global share markets, that potentially there is always a sort of a wall of worry out there, but at the moment the market is sort of climbing that wall of worry sort of one issue at a time. Brexit really just appears to be one big mess. Currently legal proceedings and sort of hearings to see whether the suspension of Parliament was legal. The UK courts have ruled that it was. The Supreme Court in Scotland ruled that it was illegal. So now having a hearing from the UK Supreme Court to see what sort of comes out of those hearings to see whether it was actually legal or not. Now again, obviously the ramifications for PM Johnson, that if it is ruled illegal, he then has to recall Parliament, get them back sitting and talking and debating to try and come up with a deal to get the UK out of the EU by the 31st of October. Given the fact that Parliament has already ruled and sort of brought into legislation that a no-deal exit is not possible. Well, it's not legal anyway. Boris Johnson still sort of feels that it is possible, but it would be against the laws of the UK. Here in New Zealand, government facing fresh criticism, sort of internal investigations into alleged misbehaviour. From some of his staffers in Parliament. But that aside, the New Zealand economy it's not too bad, but it's sort of showing signs of a little bit of sort of weakness. Potentially, obviously, we're still waiting for that the full impact of the interest rate cut, the half-point cut from the Reserve Bank. Say that should certainly stimulate the housing market. Mortgages are certainly cheap out there. And if you get a little bit of underpinning in the housing market, that should boost a little bit of consumer confidence out there as well, especially as we head into the sort of the Christmas period. But obviously with those low mortgage rates, obviously the flip side is on the investing side. And interest rates are low. We've got that Infratel bond just over 7 years at 335, just over 10 years minimum is 350. and that will then be reset on a margin over the 1 year interest rate. There's also a MetLife 7-year bond out there. Indications appear to be around sort of 303 to 313. Now, if you're interested in any of these bonds, call us on 0800 867 323. Now, if you are looking for income options, to say, there's plenty of alternatives available out there. And if you're interested in discussing what is available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.